Hi everyone, welcome back to Level Up with Dawn. My name is Dawn, and on this channel we talk about ways that I'm investing that might inspire the way that you invest so that together we can level up in our wealth and overall life comfort. So today I wanted to film my video in a bit of a different way. So do it more of a vlog style. I have actually been doing a lot on the investment side of things. I think on my channel it's usually property stuff, and I guess that's been the focus, or that's been taking the most of my attention up until this point. But because there's been a lot of change in my life recently, it's also given me a chance to change the way that I invest. And so I thought, let me detail that for you guys. let me detail that for you guys, because it may be helpful to someone. So I will do that for you guys in this video. I have been a lot more on the market side of things, so your unit trusts, ETFs, shares sort of world. So I'll talk to you guys about that and how I've decided to sort of organize that part of my life. I also did something quite interesting this Friday, and I think I like it, so I think I want to continue it. I'll take you guys through that as well. But yeah, welcome to the channel. If you like the video, don't forget to like it, don't forget to subscribe, and I'll be back with the details. Okay, so we're gonna get into how I've sort of changed my investment strategy over this past end of the year, going into now what is Feb, which is about to end. So I think previously, and I don't regret it, like I think the changing of strategies, or at least one thing that I've realized in this investing realm, no matter what you're investing in, it's okay to change strategies, especially when your environment is changing or the landscape that you're looking at is changing. It's actually very important to change your strategies, because your strategy won't work for every single scenario. So I think this time period has really helped me to like learn a bit more and understand a bit more and think a bit more about the environment I'm in when I'm deciding how I want to invest, rather than just investing because I know these things exist. So now I'm in a period where I am looking more towards the stock market for investment. Like previously, most of my money, if not all of my money, would just go towards the properties. So if it's not maintenance, if it's not the actual bills from month to month, then I am paying down that loan. Now though, I'm like in a bit of a limbo because I'm changing jobs, or I've changed jobs. So now I'm like moving my banking and that kind of stuff. So that piece, the property piece, is in a bit of limbo, because my cost of funding there rose for a bit, but it's about to decrease back again. Actually more than it did before. So I'm excited about that, but like while that's happening, I can't really do much on that side, and I'm not going to do much on that side. So I've been, just because on my side, like I don't have an emergency fund, like I don't have any of those things. All I have is like unit trusts and unit trusts, and then I had like some shares, like I think 2 or 3 shares in companies, like holdings in companies. So if I needed cash, then I'd have to liquidate one of those things in order to have cash. But now I'm in a position where I want to actively rebuild, like, or even build for the first time, emergency funds, savings, like just pure savings, like just money sitting somewhere not an investment. So that's the journey I've been going on for the past, let's say, 3 months. And so I've used this opportunity of changing banks to also just familiarize myself again with what's out there. And now I'm like opening a lot more different types of accounts. So um, I've opened up a tax-free savings account. I highly suggest that everyone who ever comes across this video open one up. I am not a financial advisor. These videos are not financial advice. I'm just telling you what I do and why I do it. And this is for entertainment purposes. So yeah, um, tax-free savings, tax-free savings account, and then tax-free savings account, and then I have also started investing in shares more. So, because my job naturally lends itself for me learning about companies, studying their financials and seeing trends and that kind of stuff, I'm sort of like, I will look at a company and I'll be like, I'd buy their shares. And so now I actually do, if I have the funds to do so. So I've been doing that. So I have a much more diverse holding of shares now than I used to. Like going into adulthood, I only had telecom shares, and that's just because of the I guess the BEE shares that were available at the time. They were only, well, most of them were in telecoms companies. But now I have more of a diverse shareholding. I have real estate investment trusts. I have indices. I have individual shares in the resources sector, in property, um, in financing. What else? Yeah. So like I'm working on diversifying that a bit more. And the one thing that I really, really want to just ramp up on for the rest of my life is indices. Because what I didn't realize this before, but when you hold an indice, when you hold an index, um, when companies in that index pay dividends, you receive dividends too, and it's like proportional to how it's like your index is composed. So I'm like, oh my word. I've been trying to figure out, okay, how can I put myself in a position where every month from my shareholding, from my shareholding, every month there is a share in my portfolio that pays me dividends. That's like my ultimate goal. Like I want my share portfolio to resemble annuity income or to resemble fixed income. Like, because that's the goal. That's the goal. That's passive income in a way. So I'm thinking now, okay, cool. Maybe I need to definitely like ramp up on the index side of things, slow down, or maybe not even slow down, but be more picky on the share side of things. So on the share side of things, I've invested in companies that I saw were actually good business models. But like the market as a whole is down, so they also down, or their sector as a whole is down, so they are down, and it's not really their fault. And so I invest in those, and like those you are easy. It's easy to see returns come from that a lot quicker, because as soon as something turns around, like they're the first to bounce back. Um, I've also made some bets. So, like companies like Transaction Capital, I made a bid on. Nampac, I made a bid on. I'm not suggesting you do the same. And like when I did this, it was months ago. So the return metrics have changed. um, yeah. So there's like some companies that I've made a bet on where like the upside is enormous, but I could still very much lose my money there. Um, so yeah, that's basically what my share consists of, or my share portfolio consists of. But I definitely want to like ramp up on the indices, And I think personally, I don't like I don't want to hold the full market. Um, so I'm more in like the sub indice type space when it comes to that. Um, Also in terms of savings now, every time I get paid my salary, money gets taken out and put into a savings account. Also one thing that I've done on that savings account that I did this month is I had like quite a decent amount, and there were shares that I was looking at. I'm like, I've like so I have like a running wish list of shares that I want, and so I'm watching my funds and I'm watching the price to see when I actually enter. And so I had this savings account and it was substantial. And I was like, okay, it's in a normal savings account, earning like, I think the least you could possibly earn in any investment. That's what savings accounts are. Um, and I was like, okay, let me just take all of this out, put it in my share account, and buy some of my wish list shares and indices. So that's what I did. And I'm like, that's a really good idea, in my opinion. Only because, okay, so like every month I'm isolating that money. I'm not even touching it. I have no access to it, and there's no manual intervention on my side, so that's good. Um, and so it's building up on the side. But also because of where the market is right now, a lot of things are underpriced, or are like we just be waiting for that first interest cut. We're waiting for that first interest cut, and then like things are gonna change. But like until then, like we're holding on. So I feel like this is the time to buy shares. So I think, yeah, that's what I'm gonna do. Like for the next um up until June, because I think that's when they planning cuts and stuff. Up until then, like I'm just gonna have like, okay, every 2 months I take what I've saved, buy shares. With that, yeah. So that's interesting. I want to see how that goes. Um, and even if it's not even if it's not an actual individual share, I have my indices that I wanna just like ramp up like ridiculously. So yeah, I'm excited about those. Um, and then what else have I done? So also my new bank, um, they have this thing where you can, so if you spend money, then it can round off like any extra cents that you had, put that in your savings account, and then also maybe an additional amount that you want. So I've said, like, let's say I buy something for 8 Rand 50, they're gonna take that 50 plus another 20 Rand and put in my savings account. So that's gonna ramp up, especially like as I use the card more and more. So that's good. That's also like another source, and that's great because it's like passive, and then that's even more for me to just buy shares with. Maybe even at the end of every month until June. So yeah, there's that, and then like with the unit trusts. So I have a retirement annuity that I have, and that separate from my pension that my employer pays into. So I have a retirement annuity and I do that every month. And then I also have like unit trusts, and I've done since I started, like left university, like without a doubt, every single month, and it escalates every month, every year also. But now I've been looking more for different types of funds. So because I know more now, I'm looking more for like income type funds, because of that bond component, that monthly interest, that gets paid in, it's like a monthly dividend type of a thing. um so I really enjoy that. I think my goal personally is to eventually get to a point where I can participate in bond auctions, because I know they exist. I've seen, you know, like I guess the quantums that are involved in those kind of things, and it's a lot of money, and I'm not there yet. So, you know, that's what we're working towards. Or at least, like, I don't know, I need to find a way, or I need to find a mechanism in which, like, the everyday person can invest in bonds. If you guys know anything like that, please let me know in the comments. Like, truly, truly, I want to know if I could put together, like, you know, a little bit of money and say, like, okay, yeah, I want to hold in this bond. I would really, really love to be able to do that. So if anyone knows how, let me know in the comments. But yeah, that's what I'm doing. So a lot of like indices, buying shares, savings account, like first thing after your salary drops, diversifying my unit trusts. Am I doing global investing? Only through the indices. I personally, I do not feel comfortable selecting international stocks like on an individual basis. Like just seeing what happened to Nvidia this week, I'm like that market is volatile. Like I can understand how people make a lot of money there, but it's so volatile. Like I need time to just, you know, watch it for a bit. But my international exposure, I only feel comfortable at this stage of my investment journey, um, doing that through ETFs, indice ETFs. Yeah, I mean they have to be. So not unit trusts, not unit trusts, because unit trusts are not as liquid as ETFs. In case you guys didn't know, maybe I should do a video, you know, isolating those things. But unit trusts are not as liquid as ETFs, even though they end up being the same thing in terms of exposure. But yeah, I do it via my, like, you know, your S&P 500s, your MSI Worlds, MSI China, or MSI Emerging Markets. Like those are the different types of things you could invest in. There's quite a few. Signia does, 10x does, the banks do. Um, yeah, there's a lot. But yeah, so that's what I've been doing. I think that little revelation about the taking my savings every month and just buying shares with it, at least now, until the first cut, just until the first cut. Because then, I don't know, things might change. And I don't know how they're going to change. So I don't want to like um, promise for any time after that horizon. But yeah, I hope this video helped you guys. If you're looking for different things to invest in, different ways to look at investing, I hope this video helped you. Again, this is not financial advice, it's for entertainment purposes. I'm just telling you guys what I'm doing and my rationale around it. If you enjoyed this type of video, please let me know if you'd like me to do more of these. And I'll see you in the next one. Bye.